Hi there. In this video, I'm going to be looking at financial processes, but more specifically, income statements as a form of monitoring and controlling. So firstly, income statements. It could also be known as statements of financial performance, and they show a number of things. For example, they show the operating income earned from the main function of the business, which is selling things. So sales of inventories, services, and also non-operating revenue earned from other operations, such as interest, rent, commission. It also shows the operating expenses, such as buying inventories, buying the stock, payment for services, and other expenses incurred in the main operation of the business, such as advertising, rent, telephone, wages, insurance. So we'll look at a very simple income statement now, and simple in the sense that it doesn't have a lot of expenses there. I'm constrained by space here, and it also doesn't show the taxes paid as well. So it's simple in terms of it's just going to go through revenue, gross profit, expenses, and net profit. Okay. So firstly, revenue. This figure here we've got here, the $730,000. That's through sales. That's by selling the goods and services. So let's, for example, a company that sells televisions. They've made $730,000 for the year selling televisions. Then we've got the cost of goods sold, the COGS. Now this is the value of the goods sold to the customer. So the televisions aren't going to be made by this company, they're buying them ready-made. So the COGS here will be the value of the goods. So $260,000 was spent by the business buying these televisions before they can then sell them to the customer. So then what happens is revenue minus the COGS, so the amount of money you made in the sales minus the amount of money it actually cost you to make that sale, to have the goods in the first place, gives you your gross profit. And then as we keep flowing down, we then got expenses. So for example here, rent and wages, these two together equal $232,000. So then finally we've got again, there should be a tax element in here as well. However, as I said, this is a very simple income statement. So gross profit, then minus all those expenses, then gives us our final figure here of $238,000, which is the final net profit. I hope this very brief video on income statements has been useful. The next video will be looking at balance sheets as another form of monitoring and controlling. Thank you.